All right, now let's recap what we went over in section 6. So we started talking about exiting, and we went through stops and profit taking, and we went through all the different strategies for each. So for stops, we talked about that volatility-based stop, which we went over the ATR factor. And then we talked about time-based stops, which is just exiting a trade if it hasn't gone for you in a certain amount of time. Momentum-based is very similar to time-based. If price momentum stops going in your favor, exiting. Then the fundamental-based stop was talking about if something came out from a fundamental perspective that completely invalidated the thesis or made you not as convicted, just simply exiting regardless of what the chart says. And then price structure stop, which is what we primarily use at macro ops, and that was if it violated a key area on the chart, making the pattern useless or less likely to play out. And for profit taking, we talked about targets and specifically the implied move of a pattern, which we just took the width of the congestion zone and we added or subtracted the breakout area to get a decent area for a target. And then also trails. So as a trade does move against you, we can constantly trail up and protect or lock in our profits by using price structure. Or that, if you remember, that ATR trail moved up as well. And if price were to come back against you, you simply just get out as it violates the trail stop. And then event news based. So if some crazy news comes out or some huge event that causes you just to completely lose faith in the trade, maybe a central bank announcement, just simply exiting the trade there. And then we talked about this concept of taking profits at targets is going to make your equity curve on your trading account less volatile. And that's because when price trends up and you're taking profits when it's up high, you're not going to be susceptible to that give back. Versus if you're going to err on the side of trails, then you're going to have your last of this give back, because if price goes up and let's say you're moving your trail stop up to here, price can fall back and it'll give back much of your profits without necessarily hitting that trail stop. But the benefit of this particular style is that you're going to get on the train for the next leg and have bigger winners. So just something to consider when you're designing how you want to exit your trades. Then the next lecture, we went into probability mutation. And so we talked about how reward or risk greatly affects your ballpark win rate. And for example, 1-to-1 reward or risk, if you structure your trades like that, it's going to give you generally around 50% wins. 2-to-1 would be 33, and 1-to-2 is 66. And then what we hope to happen is that our edge and our analysis process is going to increase these break-even win rates to something above, for instance, 50% if we're looking for a mainly 1-to-1 reward or risk. So the primary purpose of this lecture was to show you guys that the way you structure the reward or risk has a much bigger impact on the win rate of your system than your actual analysis technique. So the analysis technique is just going to tweak these numbers slightly, hopefully up. And the reward or risk is really going to make the ballpark win rates for the system. And then we talked about with tighter stops, you're going to get more leverage, bigger winners, but you're going to be prone to more stop outs. So your reward or risk is going to be great, but you're also going to have a lot more stop outs because of how tight the stops are. And then with the wider stops, we'll have less leverage and smaller winners because the reward or risk isn't as great, but we're going to have less stop outs. So you're probably going to be winning more with wider stops. And then we wrap that one up with talking about the paradox of winners, which is the really tough balancing act of trading. And that's when price starts to move for you on your trade, your reward to risk becomes worse. So let's say we're looking for 4R, so we're looking to risk 1 to make 4, and here's our target. As price trends up towards that target, our risk reward ratio changes. So as we get up higher there, we might only have 1R left in potential profit, but if the trade came all the way back and stopped us out, we would lose 4R. So the 3 we already made plus the 1 from the stop out. So it's something to be aware of. As a trade goes for you, it becomes a worse and worse proposition. So we got to constantly balance that act of, should we take profits and get more aggressive as it nears our target, or should we let it run and try to hit for a big move while risking a lot of give back? Then we went through Bayesian inference, which is basically just updating trade management strategy as new information becomes available. And that's so important because once we put on the trade initially, we don't have that new information. So if we're able to update it with the new candles that come in, the new news, we can optimize our trading. And the first step with that is to define the ideal trade scenario. So we want to say, hey, what are we looking for in this trade? What's the absolute perfect scenario? And then look for reasons to cut the trade if the scenario doesn't look like it's going to play out. And then we talked about common things that would tell us from our trading if we weren't going to get that ideal trade scenario. So for instance, the retest the breakout failing, or the weekly chart not confirming, or no immediate continuation after initial entry. These are all signs that we're not going to get our ideal trade scenario, which we defined as a breakout running straight up to a target in one nice strong move. And then from there, we segued into talking about the fact that you shouldn't just be using a static target. So if a trade starts to move your way, it might start to look like an ideal trade scenario, but we still want to constantly be looking for failure points so we can eliminate the amount of give back if a trade starts to turn around. And we talked about extreme candles, wide body candles, blow off top or bottom action, and then the underlying not moving with this group correctly. So if you're along a tech stock and the NASDAQ was ripping, but our tech stock wasn't ripping with it, that's also a bad sign. So constantly just looking for reasons to take our trade off if it doesn't look as good anymore and the thesis starts to weaken. And if we do that, we can optimize our trading results. So for the action steps for this section, I want you guys to test 2 different management styles on small size. So, don't use extreme amount of size. This is just in a test and experiment to find what you like the best. And one style, you're going to lean towards profit taking at targets and taking winners early. And then the other style, you're going to lean towards taking profits on trails and letting the winners run for huge gains. So you're going to see in action all the stuff we talked about in this section when I talk about win rates and average winners and average losers, the sizes of all that stuff. This is really going to help cement that into your mind because you're going to see it play out. And what you'll find is this first style, you're going to be winning more often. It's going to be less give back, but you're not going to have those huge runaway winners. Whereas this other style, you're going to be losing a little bit more. You're going to be giving more profits back because you're coming out on a trail, but you'll be in the huge moves in the market. So after you test these 2 different styles, I want you to record what fits better with you emotionally. Everyone's different, and you need to really just do this for yourself to get an idea of what you want to do going forward. So some guys just love taking profits really early. They want high wins. They don't like to give a lot of give back. Other guys, they'd rather just be in for the huge moves and run trends for as far as they can. So it's a very personal thing, and there's no right or wrong answer. Ultimately, it's just testing and iterating towards what works best for you.